Hello, everyone. Welcome back to another Lunch and Learn webinar series. This is Mayur Thaker. I'm an equity strategist here at Zacks Investment Research, and today we are doing a deep dive into AMD, Advanced Micro Devices. I believe this is a very iconic company and one of two major players that is well positioned for growth in the era of AI at a very, very compelling valuation in my view. So today I am pitching an investment thesis for AMD. So let's get started. So in general, the big picture overview of my thesis is that I believe, again, just an opinion, not a reflection of the opinions of Zacks Investment Research, also not investment advice. But I will, before beginning this presentation, I will say that I do, as a full disclosure, I do own shares of NVIDIA personally. And so before I get started, I wanted to just make a full declaration and disclosure of that. But my views are my own and are not necessarily the views of Zacks Investment Research. So the investment thesis, in my view, is that shares of NVIDIA at its current price of just under $100 as of today and market capitalization of 160 billion offers a substantially attractive reward to risk ratio. And in a nutshell, I believe that AMD is well positioned for growth in a very large and rapidly expanding market for AI accelerators, right? So we've heard this in the media for well over 2 years now, with the rise of and parabolic move that we saw with NVIDIA. And what's often left out of that conversation or is a distant second in the conversation of AI hardware is AMD. And this is a company that I believe is still very competitively positioned, despite the fact that they are the much smaller sibling to its big brother, NVIDIA. But this is a story that I think should not be ignored because of the th types of things that they have in the pipeline and some of the things that I've noticed is happening with AMD's customers today. And I will take a look at exactly what that is. I believe AMD's hardware has been highly competitive with an industry leader, NVIDIA. But the reason why AMD has not gotten the traction that NVIDIA has had over the last 2 years is because of the lack of software capabilities. But, and this is something that's been happening just this year, very recently, I believe that these software capabilities are narrowing, meaning the gap between AMD and NVIDIA in terms of software capability has been narrowing. AMD's hardware capabilities are and always have been very competitive with NVIDIA. There's no question about that. Most customers have seen this in independent testing. Hardware-wise, AMD is right up there with NVIDIA, but the reason why NVIDIA has really taken off is because of their software capabilities. We'll take a look a little bit about that and discuss that as well. Number three, I believe that AMD's long-term success is not going to come from AI training compute. So this is something that we have to learn and distinguish. This is not going to come from AI training compute, which is where the majority of revenue for NVIDIA has come from these past 2 years, right? With these very large data centers, often dubbed as the hyperscalers, which are buying NVIDIA GPUs, in the thousands, tens of thousands, and building these very large supercomputers. And the reason for doing that is because they have very large data sets that they want to run, exaflops of data training to build large language models and to build other types of AI models, namely things like ChatGPT and those types of systems that, people are using now. This is in the world of AI training compute. NVIDIA enjoys a very large lead in that. They own 90% market share in this area. AMD is a very distant second at just 8% market share. But the reason why I'm getting very excited about AMD is that in inference, which is an entirely different market, I believe, and others also believe, that NVIDIA does not have that significant of an advantage over others, including AMD, especially AMD. And inference could be an even bigger market than training over the next 5 years with the rise of real-world AI, such as autonomous driving and robotics, specifically humanoid robots. Um, AI training, in the sense, if you want to just put it in plain English, training is if you feed large amounts of data. Uh, AI training models, AI models basically use that data and try to make sense of it. So it's all data, right? So this is computer data, data that exists on computers, and you're building a model that tries to make sense of all this data by using logic and reasoning and things like that. Inference is a very different world where inference interprets the real world. So if you think about it, you have your own two set of eyes and you have a brain, right? Your brain is where the training has been, compounding over time, right? Your brain has learned to understand what hot means and what cold means. Your brain has learned to understand, if I, plug my computer into the wall, then the battery will charge, right? Because you've done that before and you've seen it. This is all very simple training, right? So that's where training occurs, where you have data and you've learned to think about that data and, use logic and reasoning skills to arrive at a conclusion. Inference, however, is the processes that happen where you see something visually and you are able to understand what that is. So if I were to show you an elephant in real life versus a very rudimentary sketch of an elephant, you would know in both instances that this is an elephant, right? That is inference. That is a long, many years of training from, our infancy. We have learned to understand shapes and therefore use our neural networks, right? Use our brains to understand what it is that we are seeing, what it is that we are hearing, what it is that we are touching, whether this is soft or hard, whether this is smooth or rough. This is inference, meaning we interpret the real world and understand what that means, right? And that is the difference between what's been going on right now with ChatGPT and others, which just uses large amounts of data to use and train models to make sense of that data. But what about when it comes to realizing and interacting with the real world? That is where inference comes in. Inference is still a very, very nascent part of the AI world. Right now, the big dollars are going to training, but I believe, and many other industry experts believe, that the puck is moving towards inference over the next 5 to 10 years. This is where, real world AI applications such as autonomous driving and humanoid robots are going to depend on. Because remember, if we want to drive a car in the real world, we need both training and inference. We can't have just one, right? You need to see both because the car exists in the real world. And so the car's camera and other, inference inputs are going to need to be interpreted as to what things are, right? So when a car autonomously is driving down a road, it's going to have to know that a shadow is not an object, right? A shadow is just a shadow that's coming from a tree that's nearby. So that's not something to worry about. But if there's a person there, that is something that we need to worry about and we need to stop and not hit that person. So, inference is, very things that we take for granted every single day, right? When we drive on the road and we see a shadow from a tree, we know that that's not an object on the road. But when we see a child on the road, we know that's a child on the road and we need to stop. Same thing with other things like a school bus. We see a school bus coming to a stop, and we have to know how to stop at that point. These are all things that we are using with our eyes and ears to make sense of the world around us. That is inference, and that's where um, I believe that the puck is going to over the next 5 to 10 years. And I believe AMD is well positioned to capitalize on that very large and growing demand for AI computing. NVIDIA has enjoyed a very large lead because they have an advantage in software when it comes to training, but inference is a different world, and I don't believe that NVIDIA has that big of an advantage. Of course, NVIDIA is still going to benefit tremendously from the rise of inference, but AMD is an equal, competitor in that arena. So, and some people believe, some estimates believe that inference could be an even bigger market than training over the next 5 years. So both AMD and NVIDIA are going to be big winners over the next 5 years, but I believe AMD offers substantially better reward to risk ratio at just 180 billion market cap. In fact, I think it's slightly lower than that as of right now, at about 160 billion market cap and a 20 forward PE multiple. So remember, NVIDIA is 10 times the size of AMD in terms of market cap. So it's going to need a much bigger piece of the pie in order to see big gains. But, with AMD at a much smaller market cap, um, the size of the opportunity ahead is significant. And therefore, I believe AMD is going to significantly outperform shares of NVIDIA, even as both companies grow and benefit from the rise of AI training and inference over the next 5 to 10 years. So again, this is purely a call based on the size of the opportunity relative to the market caps that they trade at today. A lot is priced in for NVIDIA, at, a 2 trillion market cap, whereas AMD at 160 billion, that is a very small market cap relative to the size of the training and inference market by 2030. And I believe AMD is going to capture a significantly bigger market share in the inference side of the arena, which would be significant upside for AMD given its market cap today. A quick history of AMD. AMD was founded by Jerry Sanders and others. In 1969, they initially made logic chips for military and industrial applications. They went public in 1972 at $15.50 per share. That is 40 cents in today's split adjusted terms. And today the stock is trading at $100, just under $100. So of course that's, been a phenomenal return for people that have gotten in at the IPO. And they gained significant CPU expertise in the 1980s through a landmark partnership with Intel to produce its chips, which gave it significant x86 architecture knowledge. x86 is the architecture for CPUs that prevails even through this next several decades, and that's what gave it significant exposure and know-how in that world with that partnership. And so by 1999, AMD's seminal moment as a leader in semiconductors emerged with the launch of the Athlon CPU that was capable of reaching 1 gigahertz processing speeds. If you do recall, if you're old enough to recall the 1990s rise of personal computing. I was just a teenager at the time, but I remember, putting together my own computers back then, and I was super, super stoked with when both Intel and AMD Athlon came out with the 1 gigahertz processor. That was a milestone that everybody was very, very excited about. And so I remember that happening as well in 1999. But the key thing about AMD though is that although they were still in the shadows of Intel, um, they actually outperformed even Intel's Pentium 2 processor on several benchmarks. So AMD held its own even through a very, very competitive landscape. And remember, back then, CPUs were all the rage. AMD, NVIDIA still existed, but remember, NVIDIA was always all in on GPUs. And so graphics processors were where they competed with from the very beginning. They never really tried to pick a fight with Intel, and they stuck to what they knew best, which was in graphics processing. But AMD was right there with Intel competing in the red hot CPU market. But then in 2006, AMD made a very strategic acquisition. They acquired ATI Technologies. Remember, ATI was where Radeon GPUs were, all the rage as well. That was a very strong competitor to NVIDIA back then. ATI gave AMD significant groundwork and expertise in what were called accelerated processing units, APUs. These are chips that combined a CPU with a GPU on a single die. And so this gave birth to AMD's permanent foray into the GPU world, which only NVIDIA enjoyed at the time. So AMD, really set itself apart, which was really the only company that had significant hardware expertise in both CPUs and GPUs. Remember, there was Intel, which was all CPU, and then there was NVIDIA, which was all GPU. And AMD was the only one that had, one foot in both doors at the same time. And that really started in 2006 going forward for AMD. And then from 2008 to 2013, that was a really dark period in the company's history. The company really languished in the post 2008 great financial crisis period. And in order to deal with that really dark period, they spun off Global Foundries at the time, which was designed to significantly reduce costs. Prior to that, remember, they actually owned their own foundry as well, so they did not rely on an external foundry for manufacturing the chips that they designed. So they were both a designer and manufacturer of chips. But to deal with the very, very dark period of 2008, 2009, when demand really collapsed, everybody was going through a tough time. They decided to spin off the foundry side of their business, which was designed to significantly reduce costs. Remember, chip manufacturing is very costly. A lot of, CapEx intensive. It's a very CapEx intensive business, and it's a very different business from, chip design. And so that's why, chip design and chip manufacturing have always been kind of separate. The two really have never remained together, with the very sole exception of Intel. Intel has always remained both a chip designer and a chip manufacturer. And that's a very special case, but with the exception of that, chip manufacturing and chip design, especially since that spin-off of Global Foundries was always kind of kept separately. So this was designed to significantly reduce the cost structure for AMD. It shored up the balance sheet tremendously and improved margins. And then 2014 is where it all began. Uh, yeah, of course, there was groundwork laid prior to that in 2006, but it wasn't until 2014 when Lisa Su stepped in and was appointed the CEO and refocused the company to focus purely on high performance computing, but specifically balancing performance with energy efficiency. This was very, very forward thinking because she came in and immediately knew that it's not just performance maximization that is going to have significant demand in the long run, but energy efficiency as well. This was very, very prescient because energy efficiency is a major consideration for AI. AI is obviously very power hungry, but also it is very, dependent on and really the demand for AI chips is always a balancing act between power and efficiency, energy efficiency. And this is going to be especially important for the inference market, right? Because inference, in many applications is going to be in a mobile device, like a car or a humanoid robot. Remember, these are not directly plugged into a permanent power source all the time, like it is in the case at data centers, right? Data centers, you can get away with a little bit less energy efficiency because you're always plugged in. But what about an autonomous car or a humanoid robot? You're going to have to see energy efficiency dominate the consideration to a much greater degree because these devices are mobile and they have to be mobile in order to work. So Lisa was very, very prescient early on to make sure that everything that they do was always a balancing act between power and efficiency. So this early decision positioned AMD perfectly to advance in AI and machine learning applications. In 2017, the AMD Ryzen chip launched, which marked the company's competitive resurgence that ended up capturing 24% of server market share by 2023. And then in 2022, the company made a big acquisition in Xilinx. That was probably the biggest M&A deal in the semiconductor world. That brought significant AI and machine learning expertise on board. And then from 2023 to present, significant progress in the AMD Instinct MI300X accelerators that challenge and even beat, in certain cases, the NVIDIA 100 performance benchmarks. This MI300X is the main chip that AMD has, in the world of AI training and inference. This is the chip that does it all, and that's the chip that's going to be where I believe AMD is going to bridge and narrow the gap to a point where it will hit exit velocity, and allow AMD to gain significant market share from NVIDIA. But again, with both companies growing, because the market overall is going to continue to grow over the next 5 to 10 years. And so under Lisa Su's leadership, revenue multiplied from 4 billion in 2015 to 26 billion just last year, with data center segment contributing half of all revenue. The company very successfully pivoted itself into the GPU world where others, such as Intel, have very, very epically failed. This was one of the greatest pivots for any company. Remember, NVIDIA never had to pivot. They were in the right place always from the very beginning. And that's one of the reasons why they have dominated the space thus far. But AMD pivoted from CPUs to GPUs quite well and have continued to be very successful in both. And so that by itself is truly a remarkable feat that Lisa was able to execute under her leadership. Now, bears maintain the bear case is that while AMD does have impressive hardware, they trail far behind the industry leader NVIDIA in software. NVIDIA runs the CUDA software framework, and this is the gold standard for developers since it comes with complete plug and play AI, machine learning, deep learning application libraries. It's basically a turnkey solution for developers, so they don't have to spend a whole lot of time coding their own software. So this basically allows customers to hit the ground running with AI model training. So obviously, if you're Meta and other very big players like Microsoft, this isn't that big of a consideration, because they have their own software. And that, ironically, is the reason why, as we'll see in future slides, why big players like Facebook, like Meta and Microsoft have actually used AMD as opposed to NVIDIA, because they don't actually need the software that NVIDIA provides, the CUDA software. They have their own software in-house. But obviously not everybody is Meta or Microsoft. And so the rest of the world that, relies on AI training also relies on NVIDIA's CUDA software. And that's why they've gotten significant market share in AI training computing industry. Uh, AMD runs the ROCm software framework, and that's been sorely lacking and far behind the CUDA framework. However, in a bold move that validates AMD's technology, as I just mentioned, Meta made a big bet to use exclusively AMD's MI300X chips to run their Llama frontier model. This is a wide-ranging AI model with deep learning recommendation models and large-scale AI inferencing workloads. And after extensive testing, they found that the ROCm solution from AMD achieved 92% of NVIDIA's CUDA-based systems by teraflops per GPU power output. So that is very significant. 92, basically the result of NVIDIA, using CUDA, they were able to replicate 92% of that in terms of teraflops per GPU using AMD's ROCm software. And the next generation ROCm software that the future MI450 chip will use actually exceeded NVIDIA's H100 solution by 73%. So what this is basically saying is that the gap that NVIDIA's CUDA software has had thus far with AMD's ROCm software is most likely going to narrow dramatically over the next 6 to 12 months. Microsoft, similarly as Meta, just to show that this is not just a one-off, Microsoft is also using AMD Instinct MI300X to power multiple GPT-4 based Microsoft Copilot services. And so overall, AMD is actually now powering 5 of the 10 fastest systems in the world and 15 of the 25 most energy efficient systems in the world. And case in point, the El Capitan, uh, system. This is a supercomputer at the Lawrence Livermore National Labs, which is operated by the U.S. Department of Energy. This is now the world's fastest supercomputer. As of 2024, this is the largest or the fastest supercomputer, and it's powered by AMD Instinct MI300X chips. So this just goes to show AMD's prowess in hardware capability. And this has always been the case. AMD's hardware capability has always matched that of NVIDIA's. But the reason why NVIDIA has won 90% of data center market share is because of their advanced CUDA software framework. However, again, like I've been saying, that gap I think is closing by multiple accounts. Meta's own testing and Semi-Analysis, which is a think tank which provides very valuable deep industry research in the semiconductor world. They've started to test themselves that gap that ROCm had with CUDA is getting a lot narrower just in the last 4 to 5 months. And so what are the catalysts? What's going to be the catalyst to get the stock out of the funk that it's been in? Remember, the stock is down more than 50% from the top, from over 200 down to well below 100, getting as low as $75 a share very recently. So I believe that there's two major revenue catalysts for 2025. Number one, continued rapid expansion in that ROCm software library to narrow the gap with NVIDIA's CUDA. That's number one. And number two, which is related to number one, is hardware that goes with that software. And the AMD Instinct MI350, which features CDNA4 architecture, which is expected to go into volume production in the second half of this year, will be a very strong source of customer demand. And the reason for this is, in CEO Lisa Su's own words, CDNA 4 is the architecture that the new MI350 chip is based on, which will, quote, will deliver the biggest generational leap in AI performance in our history, with 35x increase in AI compute performance compared to CDNA 3. This is very significant because one of the reasons why ROCm software has lagged NVIDIA's CUDA framework is because ROCm thus far has been based on CDNA3 architecture chips. So even the great and latest and greatest MI300 chips, which, the Lawrence Livermore National Labs is based on, and many others is based on, this is all based on CDNA3 architecture chips, MI300X chips. But the th MI350 chip is going to be featuring CDNA4 architecture, and that's going to unlock significant jump in performance. Um, this is very, very significant. And this new chip, the MI350X, is expected to go into production. And they actually pulled it forward a little bit. They were originally guiding for late second half of 2025. And based on the language from the last earnings call, it looks like they're pulling it forward by a couple months and are guiding for, mid 2025. So it could be, in June or July or possibly August, but that's still earlier than what they called for before, which was late 2025. This is going to be a very strong source of customer demand, which I believe will finally get the stock moving. So again, strong Ryzen execution, that's on the CPU side, and then, MI300X execution and MI350 execution and competitive positioning. Um, this is what's going to lead to the growth going forward. But the growth in the past has been spectacular. We've had 28% revenue CAGR over the past 5 years. And again, that's expected to continue going out the next 2 to 5 years as well. Rapid earnings growth over the next 5 years. But look at what's been going on here. This is why I'm very, very bullish. You can see that despite very rapid earnings growth opportunities ahead into 2026, 27, and 28, we have had significant multiple compression. This is because Lisa has guided for a little bit of a slower start to 2025. So the market is really taking that um, as an indication that they haven't really made progress versus NVIDIA. But I believe that is a mistake based on independent testing from Meta and Microsoft and semi-analysis. It looks like the gap has narrowed, and I believe that there's going to be significant mojo that comes back to the stock once we get MI350 into production mid 2025. So we will see, but this right here is a very, very compelling opportunity, mainly because a lot is really not being assumed in the stock right now. This is where we love to use that term, margin of error. At a multiple of 20 times, right now the stock is trading at 20 times forward earnings. At 20 times forward earnings, you really have not a lot being priced in. So there is a very wide margin of error. Even if we don't get anywhere close to the growth that I think we're going to get, you can still earn a very significant return in the stock. This is why I believe this is right now, a very, very compelling opportunity to own a company that is well positioned to succeed over the next 5 years in the AI training and inference industry. Quick summary of 2024. This is directly from AMD's earnings deck. You can see that revenue grew 14% last year. That was a phenomenal, year overall as they executed quite well In the data center side of things, that's driven by, again, like I said, the MI300 chip. Even gross profit was up, faster than revenue, which you love to see because that's where operating leverage really starts to show that they can grow the bottom line faster than the top line. You can see that while revenue was up 14%, gross profit was up 20%. That means that gross margins did expand. And as you saw there, it went from 50% in 2023 to 53% in 2024. So we love to see that, and the bottom line you can see it was up 25%. That's exactly what we like to see here. And a big source of that revenue gain, again, was from the sexy data center side of things. That's where everybody watches NVIDIA as well. And data center revenue, really grew significantly, 69% year over year. Again, very strong execution from the MI300X chip. And so data center revenues were very, very strong. But again, the reason why the market was really getting pessimistic here in the stock is because, just again, this is just my interpretation. This growth is coming from just a couple hyperscalers. Basically, it's coming from Meta and Microsoft, and a couple of one-off projects like the Livermore center, right? The Livermore National Labs. So again, one of the sort of criticisms of this entire industry, which includes NVIDIA, is that a lot of this revenue is one time because once you build the infrastructure, this is not repeat business, right? This is not recurring revenue. This is not software subscription revenue, right? It's a one and done type of thing. And so that's why the market has really punished the stock in NVIDIA, as you can see here, dropping from 208 at the top down to well under 100 now. And it's partially because despite the fact that we grew 69%, the market believes that this is, hard to replicate um, because of many one-time, projects that may not repeat. The reason why NVIDIA has fared much better than AMD is because they have a wider net of customers in the data center side of things compared to AMD, that is. And that is because CUDA, in terms of software, allows them to cast a wider net. So they're not as dependent on just a couple of very big players that can do their own software. They have, a much wider net with much smaller, players, that can, make the investment in NVIDIA because they have the software capabilities that allows them to tap into the power of the NVIDIA chip without needing software expertise. Whereas if you're making a bet on AMD, you already have that software expertise in-house, right? And so that's really not the case for many smaller sized companies. And so that has been the big bear case for NVIDIA. But again, if you believe that the MI350 chip on the CDNA 4 architecture um, is going to allow them to um, take the software and narrow the gap significantly with NVIDIA, then that is going to change, I believe, in 2025, heading into 2026. So, again, shares have been under pressure, dropping from over 200 to as low as 80 to 75 very recently. Investors irrationally bid up the stock in 2023 in anticipation of significant data center market share. That never happened. Turned out that NVIDIA was the big winner with 90% market share and AMD landed only 8%. So the market, is really believing that that 8% that AMD landed is from, like I said, a couple of big buyers that don't need the software. And there isn't enough repeat business from that side of the customer demand that, justifies a premium valuation like NVIDIA got. So the big challenge for AMD is, can they narrow the software gap with NVIDIA? I believe that the answer to that is yes, but here's the big thing. The current market capitalization and PE multiple has fully erased the premium, right? So that sets up very low expectations for AMD, very attractive reward to risk ratio. So if AMD can continue to narrow the software capabilities gap, which, semi-analysis, which I really pay a lot of close attention to, because they, are, a tremendous source of insight in the semiconductor industry. um, they have started to independently confirm after being very bearish. Remember, they're not, tied to AMD. They were very bearish as recently as December of 2024 on ROCM, but they really started to change their tune beginning in April of this year, basically just last month. And so I believe that is something that we need to pay attention to, and that's what really prompted me to do this video and stick my neck out for AMD right here, right now, at the current price of just under $100 per share. So if they continue to narrow the software capabilities gap, and if they execute well with the MI350 chip, which is entering production in the second half of this year, and then thereafter, the next iteration, the MI450 chip next year, and if AI developers advance autonomous driving and humanoid robots for real-world AI applications, then the size of the opportunity ahead is massive relative to today's market cap. So, there are estimates that show that the global market for AI inference computing is projected to grow from 100 billion this year to 250 billion by 2030, or a CAGR of 20%. And so if AMD's ROCM software continues to narrow that gap with NVIDIA and executes well with the CDNA4 architecture, the company could really see revenue and earnings go parabolic over the next 5 years. I don't use these words lightly, but I think there's a real shot that that can happen over the next 5 years. And even if NVIDIA remains the dominant player for AI training, the AI inference market is up for grabs. That's not an area that necessarily, um, requires NVIDIA's CUDA framework. So AMD, I believe, is positioning themselves to win where they know that they have a better shot, and that is in the inference side of things. So I believe, AMD can capture 40% of the AI inference market. And even if they keep just 50, even if they get to just 15% of the AI training market, because of, NVIDIA's first mover advantage. But even if that occurs, 40% of inference and 15%, just 15% of training, then AMD's revenue by 2030 could easily reach $100 billion. And if you assume just 25% net margins, that's 25 billion in annual profits. If you put a 30 PE to that, again, very, very tame multiples here. That implies a 750 billion market cap versus today's just 160 billion market cap. That implies a price target of $464 per share, up from today's $99. And this does not, by the way, this doesn't even take into account the company's share buyback program. So on a per share basis, the price target by 2030 could be even higher than $464 per share. That is a very, very substantial and attractive return over the next 5 years, roughly a 5x over the next 5 years. And again, this does not assume a lot. The market for inference, the writing is on the wall, and it's happening now. And, if they can, again, bridge that gap just a little bit, then at the margin, AMD will still realize substantial growth over the next 5 years, even if it doesn't get to 40%. That's why the margin of error, right, as the great value investors like Charlie Munger and Seth Klarman and others have talked about, the margin of error is very much skewed to um, to your advantage as an investor in AMD at today's market cap. 160 billion market capitalization relative to the size of the market, which is, 250 billion in inference and somewhere around that as well in trading. That is a lot of spend over the next 5 years that is going to be captured by basically two players, NVIDIA and AMD. And AMD, I believe, is only going to narrow the gap with NVIDIA over those next 5 years. So, the upside is tremendous. And I believe the base case for me is a 464 price target or $500 price target if you, also consider the share buybacks that are, currently in place now. And AMD is a member of the Zacks Deep Value Proxy. This is our portfolio of high quality businesses trading for very cheap multiples, dirt cheap multiples, relative to their long run trend earnings growth. So I hope you found this helpful. I'd love to hear from you. Any feedback, any questions, please do reach out. You can reach us at 1-866-794-6065. You can send us an email to strategycall@zackspro.com if you have any questions with regards to any content in this presentation, or if you wanted more information about the Zacks Deep Value Proxy. Again, our portfolio of some very high conviction, high quality businesses that are trading for incredibly low multiples. Please do reach out to us, and we'd love to send you some more information about these portfolios and other model portfolios that I myself and others here at Zacks Investment Research maintain. Hope to talk to you soon, guys, and take care.